Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Money 2020 in Las Vegas, Nevada. Joining me for this segment, we have Lule Demmissie. She's the CEO of eToro US, also my partner in crime in the FinTech conference circuit. She's here to talk about eToro's partnership with iShares by Blackrock and what that means for investors. Lule, it's great to see you as always. Welcome back to TradeTalks.
Great to see you as well.
So this sounds exciting, new partnership with iShares by Blackrock. Why now? What's the benefit for investors?
So for us, we launched stocks about 2 years ago, we've always intended to be a multi-asset platform, and so we were always looking to make sure that stocks and ETFs had a mechanism by which our customers understood that we had them. ETFs are one of the largest held asset type by millennials. About 60 to 70% of our customer base is millennials. And so it made sense for us to be able to educate our customers. We just launched a phenomenal educational tool around ETFs, what role they can play either in a portfolio or a trading instrument. So it was the right timing, and of course the brand, sort of iShares brand and its recognizable sort of element of it made total sense.
Tell me about the eToro ETF Academy.
So the ETF Academy was, we believe in education that is in bite-size and snackable. Because people just don't, especially the generation that we're dealing with, doesn't have the patience for long. So it's like snackable courses that are about 3 to 5 minutes long, video based, educating them on what an ETF is, how you can use it, how you can leverage it, what are the risks associated with it, to make sure that beginner investors are able to leap into this interesting and affordable asset class.
And I understand you collected some data when developing this product. What are some of the key findings that stood out to you?
Yeah, so it's fascinating because when we did the survey, we do surveys on different instruments and investor trends all the time. We found that recognition around ETFs was actually under-indexed to stocks, which had like 70% recognition, crypto, which had about 50%, but ETFs among our population that we surveyed was like something like 26%. So clearly we have a gap to make up because the rest of the world, ETFs are familiar to millennials.
Yeah, I was surprised to see that over half, the biggest perceived barrier to investing is cost, right? And it feels as if, for those of us who've been in the business for 20 plus years, cost has gone down significantly,
yes,
right? Compared to what we were paying
absolutely
in the late 90s. I was surprised to see that over half thought cost was the barrier.
Indeed, I think that is the gap of knowledge, right?
Mm-hmm.
Ironically, ETFs are an affordable instrument compared to some other funds that you could be able to access. So I think this is a knowledge gap more than it is a perception gap rather than it is a factual gap.
One of the encouraging things I picked up on is that they're thinking about their portfolios more thoughtfully versus just kind of going for the FOMO trade.
Yes. For sure, and I think that's where, an ETF, what's so fabulous about it is it's a versatile instrument, right? So we can have somebody who considers it for their core portfolios, right? Or for a sector play they might want to have, or because we have options now on our platform, for a more speculative options trade. So they're really, it's like eggs. They're very versatile in the way that they can be used.
All right, Lule, I appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me from Money 2020. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.